Hello, everybody, and welcome to this week, the week of June 23rd's Weekly Market Movers video series here at Wealth Enhancement Group. My name is Doug Huber. I'm the Deputy Chief Investment Officer, and I'm excited to come to you guys this week and talk a little bit about what we're seeing in the markets. Happily, we are approaching back to our all-time highs in the S&P 500 in just 4 months after previously reaching those numbers in February 19th of this year. I think, despite a very aggressive trade war that we obviously know, there's been a lot of headlines, a lot of saber rattling about what's going on. And frankly, I think there's still a lot of uncertainty. But the fact of the matter is we are seeing progress being made. The markets are anticipating that progress will be made. The markets have rebounded off those lows. We've managed to sidestep a lot of escalation in the Middle East as of late, and hopefully for all those involved, that is behind us, and there will be some peace in the region. But that is a very large geopolitical risk that the market seemingly has, relatively shrugged off. And so we find ourselves, at least from an equity market perspective, back to near our all-time highs. I still think there's going to be continued volatility and uncertainty in the markets. But this is a faster recovery than I think any of us expected. And I think that's on the heels of a lot of liquidity in the system, right? There's a lot of people that are cash on the sidelines that are willing to buy the dip for fear of missing out. There's a lot of enthusiasm around what artificial intelligence means to our economy. There is a statistic out of JP Morgan recently that they believe that between now and 2030, there'll be $1 trillion of spending just in artificial intelligence. And then I think that the biggest one, and probably the what we'll talk about a little bit here going forward, is that our economy is still flashing strong signals. And that's not to say that can't change, but thus far, impacts from tariffs, impacts from geopolitical issues have not really shaken the U.S. economy, the U.S. consumer, et cetera. And so the hard data of the economy is still showing very strong. The uncertainty is having its impacts in what we call soft data or sentiment. So consumer sentiment and business sentiment is still lower than I think most would like to see. And that is definitely due to uncertainty. But the fact of the matter is the more that hard data continues to show us that the economy is doing well, that sentiment likely will reverse and come back to more normalized levels. In terms of markets, we're having a great week. S&P 500 is up roughly 2% on the week and probably roughly 3% on a month-to-date basis in June. International stocks are right nipping at its heels. They're about up equally 2% this week, about 2.5% month-to-date. And bonds are to continue to have a pretty good run here, up roughly 0.6% on the week and a little over 1% on the month. And so markets have had a strong June. Like I said, I think really responding to what we're seeing from some of the economic releases. Speaking to that, this week's been a little bit slow in terms of kind of what we're seeing in terms of economic data coming out. One big one was we did see GDP for Q1 with its final revision, and it was revised down. It showed a 0.5% of a contraction in Q1, but that is kind of understandable at this point. A lot of that was due to a big surge of imports coming into the United States ahead of those tariff announcements. And that kind of skewed that data to show us contracting more than it should have otherwise. And the markets have kind of gotten over that. They understand the dynamics, so that didn't really have an impact. But it's always good to understand kind of what that final data looks like. We've seen some numbers around crude oil this week. It certainly has been a roller coaster for oil in the last, call it 10 trading days or so, as escalations in the Middle East. We saw oil really spike up with fears that Iran would take their capacity offline and potentially threaten to close the Strait of Hormuz. That didn't happen, thank goodness. But what we did see was U.S. stockpiles. So here domestically, where we kind of stockpile our oil, those declined much more than anticipated. And I think that's in effect to a continued strong demand from consumers and businesses here in the United States. And so usually that's considered a pretty strong economic signal. Tomorrow we have the PCE, which is the personal consumption expenditures measure, and that's really a measure of what it costs to buy goods here in the United States. So it's a prime measure for the Fed that they look at as it relates to inflation. Expectations is we're going to see soft inflation yet again. Up 0.1% month over month. 2.2% year over year. If you strip out some of the tertiary elements and look at the core measure, which is one of the things the Fed looks at, that's also expected to gain about 1% month over point, 0.1% month over month, and roughly 2.5% year over year. So a lot of this headlines that were talked about in Q1 and early Q2 about impacts of tariffs and what it could do from an inflationary perspective, this low growth, high inflation, stagflation environment, it's just not showing itself in the data yet. And so what does that mean? I think, if we see those PCE numbers come in around expectations, meaning pretty low, I think that is going to solidify the market's opinion that the Fed will begin to get closer to making cuts to its Fed fund rate, likely in September. And I think the market will react positively to that. Now, if we see a surprise the other way, then obviously that will leave the market scratching its head. And as we've talked about, markets do not like uncertainty. And so the more clarity we get along the way, I think that'll be positive all around. We expect next week to generally be a lighter week. Usually holiday weeks, volumes are lower, people are on vacation, et cetera. And so the markets tend to kind of muddle along, but who knows? This is a tape that is filled with a lot of headline risk. Hopefully we don't have any more escalation in the Middle East. Hopefully we don't have any kind of jarring news from an inflation perspective, any jarring news from a tariff perspective. And we can have kind of a quiet week next week. But I know either myself or one of my colleagues will be on next week with updates. We'll definitely talk about what that PCE number came in at, things we're thinking about in the portfolio. But right now, I think we're happy that we're seeing our equity markets returning to all-time highs. And we've been able to take advantage of some opportunities along the way, and we also were able to step out of the way of a few risks too. And so this is a time when we continue to look at the portfolios, continue to evaluate what we're thinking and kind of what our best ideas are. But it's good news this week at least. So thanks everybody for tuning in. We look forward to talking to you next week. Have a great weekend, and if I don't talk to you, happy 4th of July.